The bankers, of course, they buy out Congress and they buy out Parliament in the UK, and they keep their power because derivatives are a gravy train, especially if everything blows up and then the government and the central bank come to help you. You don't care, do you? Because it's not your money. You've made all the millions or billions from it. Who cares if the general public has to pay for it? And that's what we've been doing. We've been paying for this since '08. And that's why everything's in such bad condition economically. Monday, August 4th, 2025, Monaco 64, home of alternative economics and contrarian views. Well, today we're going to look at bail-ins, which is the mechanism that was brought forth after the '08 crisis for dealing with bank crises. And it's very important, I think, that we look into it. I'm going to look at the Bank of England bail-in manual, and you'll be surprised about the things that they talk about. And there is, of course, the experience of other countries doing bail-in, and we're going to touch upon that. Before I do, I'd like to thank all of you for the interest in the channel. And yes, make sure as well that you subscribe to the channel if you enjoy my videos and haven't subscribed yet. We're almost approaching 150,000. I've always said that's not the most important thing for me. The most important thing for me is to create valuable content and to get the message across. What's the message of this channel? Well, it's for less government, it's for sound money, for economic freedom, right? And I'm gonna read something here today. I like to probably do a few more of these in the future before we get into bail-ins. And it's from letters from a Stoic, Seneca. And it says here in the back of the book, and I think it's important, this is quite important in the current environment because there's so much out there going on out there politically, economically, geopolitically, that sometimes we get bombarded with so much stuff that we don't really know what's true or not. But this is what Seneca said. You might inevitably either hate or imitate the world, but the right thing is not to shun both courses. You should neither become like the bad because there are many, nor be an enemy of the many because they are unlike you. Retire into yourself as much as you can. So yeah, that's something that I've actually been trying to do for a couple of decades, maybe even longer. And I bought this book recently and some other ones like Marcus Aurelius. And I'm reading through it and I realized that I was kind of following some of the tenets of the Stoics. So let me know if you like this kind of stuff, and I can do regularly. I can come out with some quotes by Marcus Aurelius, by Seneca, Epictetus. There's quite a few of them out there. So back to bail-ins. And I'm going to join derivatives with this talk because derivatives is really, I think, the... if you look at, let's say, iceberg, the tip of the iceberg is out there. That's how publicly the derivatives markets are seen. There's two kinds of derivatives, of course. There's the exchange-traded one where we get public information about the size of the bets, because derivatives are just side bets, leverage side bets on any kind of thing, really, not just financial. These days they bet on politics, they bet on anything, and usually for some reason people like to leverage when they bet, especially in the financial markets. Of course, I worked in the derivatives market, the exchange traded one. That's not really the problem. The problem is the over-the-counter derivatives. And that's the kind of derivative that you probably could learn about by watching The Big Short. And that's when a fairly big hedge fund or pension fund manager, any big financial institution, or anyone that manages money, or even speculators, that's when they go to Goldman Sachs or other Wall Street banks, City of London banks, and ask them to design a derivative for them, like tailor-made for them. And that's OTC, and that's kept, and it's over the counter, and that's kept privately, very opaque transactions that led, of course, to the collapse of '08, and nothing has been done to kind of regulate these over-the-counter derivatives. There's always been talk that they're going to become more regulated, but it never happens because the bankers, of course, they buy out Congress and they buy out Parliament in the UK, and they keep their power because derivatives are a gravy train, especially if everything blows up and then the government and the central bank come to help you. You don't care, do you? Because it's not your money. You've made all the millions or billions from it. Who cares if the general public has to pay for it? And that's what we've been doing. We've been paying for this since '08. And that's why everything's in such bad condition economically, except, of course, for the guys on Wall Street, the big corporations. So, yeah, there's something called a notional amount of derivatives. So that's the size of the bet. I'll give you a simple example. The gold futures contract on COMEX, the size is 100 troy ounces, so you can do the math. That's like $335,000 bet that you make by doing just one contract, and you only need to put about 5 to 10% down. So that's how leveraged it is. Those, though, are the ones on the exchanges. People keep track of them. The other thing that's very nefarious about these derivatives and side bets is that they're kept off the banks, off any institution that does it, off their balance sheet. So it's very difficult for investors to know exactly what's going on. In the US, the Office of Controller of the Currency does keep track of derivatives. And according to them, it's around 300 trillion, the notional amount. But some people would argue that it's over 1,000 trillion, and I think they're right, a quadrillion. It could be multiple quadrillions. And the reason I'm talking about derivatives is that when there is another major crisis, and there will be, and I think derivatives could be the trigger, it could be the little snowflake that leads to the avalanche. Well, the bail-in governance, the bail-in rules will come into effect because the too big to fail banks, they're up to here in derivatives. And in the US as well, the CFTC, not the CFTC, but the FDIC now, they're going to use the insurance that banks pay to guarantee deposits of $250,000. They're going to use that as well to kind of cover the derivative losses, which is outrageous because the people using derivatives, they're just speculators, really. They say that they're hedging, but that's BS. There might be a few people, a few institutions that do use it, like really for just hedging, but the bulk of everything that goes on in the derivatives market is pure speculation. And in the UK, it's the same. I received something from one of the viewers about the Bank of England. They're on the same boat, or in the same boat as the U.S. This is what this guy wrote to me. He said, "Did you know the BOE has a Dodd-Frank equivalent bail-in legislation just in case?" Well, of course, it's never going to happen here in England or the US. Whoa, wait. It did happen in '08, and we're paying for it. So I said that the derivative situation is just the tip of the iceberg. We're at kind of the tip of the iceberg, everything that we know. Well, yes, when things are like pretty stable, there's not much volatility in the markets. That's what it looks like, just a harmless iceberg, and everyone knows what that iceberg is, so they can cruise around it and not hit the iceberg. But the Achilles heel of this whole fiat currency banking system is volatility. So that's what we have to look for when bond markets, stock markets start moving around in sharp moves, like intraday, like they did in early 2020. Look out, because that's when the derivatives counterparties, because there's no exchange, let's say in the OTC derivatives, let's say firm A did a contract with firm B over the counter, and then interest rates spike in a certain part of the curve, or they might even drop very quickly, and you know that your counterparty is in trouble because you've got a huge bet that's been affected. And what that leads to is complete loss of trust and faith in other financial institutions. And that's when you get something like the repo crisis that we had in 2019. So I think it's a huge problem. And I'm going to put a link to this Bank of England manual for bail-ins. They published this in July 2021. They even say that they're going to try to execute a lot of the bail-in if it were to happen. And I think they wouldn't publish this if they didn't think it could happen, right? It would happen over the weekend. Yes, they have a part here, and I'll show it to you in the table of contents. It's number 3. It's really important for them, the resolution weekend. So, of course, here in the UK, we do have deposit protection, and it's currently at £85,000 per depositor, per authorized firm. And I guess if you have a joint account with your husband or your wife, it's £170,000. So anything above that, you lose in the bail-in. But I would say if we have a truly systemic crisis where all the financial institutions are in peril, just like they were in '08, you might have to wait months for this. Because I asked here ChatGPT a question: what would happen to that 85,000 if the crisis is really bad? And they said that the following: in a systemic crisis involving multiple large bank failures, FSCS's levy cap, $1.5 billion a year. So FSCS is like the FDIC. They get the funds to pay people, the 85,000, from the banks themselves. It's not through taxation. So it says here, it might be insufficient. In such a scenario, HM Treasury may provide temporary bridging finance, which is later recuperated through industry levies. However, those interventions fund payouts doesn't change the deposit protection limit itself. So what I'm trying to say here you might be waiting a very long time, even if you have less than 80, well, less than 86,000. If you've got only up to 85 or 170 as joint, you might be waiting a long time. If it's a huge systemic crisis. The other thing they will do with the depositors who have more than 170, and who would have more than 170 in the bank? Well, it's not just individuals. You look at small businesses, or even, well, big business, but even small, medium-sized business, they have to keep a lot of cash sometimes. Why would they do that? Well, for operating the business, for paying employees, for paying taxes. So I said this has happened before. Yeah, it happened in Cyprus. I think it was 2013. And I remember reading about how a lot of small businesses collapsed because they had over the 100,000 euro limit. So what's the way to protect yourself against this? Well, as an individual, depending on how wealthy you are, I would say, yes, you can protect yourself with the insurance, but it's not guaranteed to be paid right away. And in case of a crisis, you might need other, you might need the funds right away to help you in something that's going on. I think the only way really to protect yourself is to be outside the system. How does that work? Well, have some cash at home, maybe, or somewhere hidden, well hidden. And it always comes back to gold and silver, doesn't it? Have some physical gold and silver as well outside the banking system. I've always said that. And it's not because of the price of gold that I think, well, partly it has helped people who hold gold and silver. The price is going up. It's doing its job, their job, of course, of protecting you versus currency debasement. But I think ultimately it will protect you massively when the next banking crisis comes. And I think it's only a matter of time. And of course, I always get the question, when? Well, I don't know when, but it's better to be 1 day early or 1 year early than 1 day too late, especially when this would happen. And just notice how they'll do everything over the weekend, where the banks and financial institutions are closed. So, yeah, I would really think hard about what's going on, and think again about the banks. They're not safe. If the banks were safe, we wouldn't need legislation like this. Yes, the Treasury here in the UK and the US could step in and bail everyone out. But by that time, your deposits will be worthless. Have you noticed how the cost of living is going up? And talking about the cost of living and statistics, yes, they're going to hide from you the true rate of debasement or inflation or CPI, whatever you want to call it. They're going to try to keep the statistics embellished. And I know President Trump as well, he's not helping. He sacked the head of the BLS. I think that's just going to increase the loss of faith and confidence in this whole fiat currency system. And faith and confidence is really the key to keeping it going, because it's backed by nothing. It's just backed by faith and confidence. So I think it's more important than ever to know about this and to be aware of this. So there you go. So let's quickly look at the markets this morning. It's 7:45 a.m. London time. We've got spot gold at 3,361. It's down about a couple of dollars. It's been as far down as 44 and as high as 69. Silver is up about 18 cents at 37.20. So silver outperforming slightly. It's still not doing much. The stock market is up a little bit, up about 0.25% in the Dow, and a third in the S&P and NASDAQ. I noticed that OPEC actually announced production increases, which is unusual for them, but haven't seen crude oil do much. It's still pretty steady, it hasn't moved. WTI crude is unchanged, so interesting. What about the currencies? Well, they're pretty quiet, actually. Not much happening. And in terms of the bond market, the 10-year yield is up about 2 basis points, 4.24. So as I've said, right now, volatility is very low. So that iceberg is looking fine. It's not a problem. But when it becomes a problem, derivatives, and believe me, they've been behind all the major crises in the last, since '08 was the credit default swaps. Those are OTC derivatives in '07, '08. It was the repo market, really, which is all to do with derivatives as well. The basis trade in treasuries, we've been warned about that by the BIS. That was happening in 2019. Could it be that the reaction to COVID was more to do with the repo market and the powers that be trying to save the banks? I would say definitely. And before even the repo market kicked off, went into crisis, and COVID came about, they met at Jackson Hole, the central bankers from all around the world, and BlackRock was there telling them, next time there's a crisis, you got to go direct. You got to buy assets from the stock market, not just treasuries. And they did that. So, be on the lookout for things like that, like what might happen at Jackson Hole and so on and so forth. I think Jackson Hole is usually September time. In Kansas, it's organized by the Kansas City Fed. So with that, I'm going to wish you all a very good day and a great start to the week. Take care. Bye.